Well, good morning, everyone. Welcome to our Wednesday open house for our diversified trading system. Hold on just 1 second here. I'm going to get you my monitor so that you can see what's going on. The market's just opened up and a little bit of a softer open than what they have been the last couple of days. Okay, so what you're looking at is the diversified trading system, and it's diversified because it's actually split up into looking at the market from different points of view. So here in the top left corner, we have the Hawk Micro Scalper. This tool here has been designed to pick up scalp signals. Next to that, on the top right, we have the Falcon Swing Trader. This tool, as the name suggests, has been designed to pick up swing trade signals. The bottom left is the Eagle Trend Trader. This tool has been designed to pick up trend signals. And then on the bottom right is the latest addition to the DTS assortment, and this is the Raptor. The Raptor is actually a combination of all three systems into one. So for those of you who are used to trading off of a single chart or prefer the simplicity of trading off of a single chart, the Raptor is a very good system for you. Now, all the tools generate signals exactly the same way. When a signal is first emerging, you're going to get the warning dot. That tells you that there's a possible signal building. When all the parameters for the signal have been met, you're going to generate a triangle and a hash mark. That tells you that it's decision time. All the parameters that are required are in place. And now it's time for you to take the signal or, pass on the signal or whatever. But anyways, it's decision time for you. Now that's going to develop the same way whether it's here in the Hawk. You're going to see here in the Falcon, we get warning dots. Well, this was a little early. We kind of negated the warning dots. Here we get warning dots, we get triangles and hash marks, and that tells us that the signal parameters have been met. Same thing here with the Eagle, where we get a warning dot, and now currently we're working on a triangle and hash mark, so this tells us this is a complete signal, and it's something that we need to consider. Now you're going to notice that we don't necessarily take every single signal. Some signals are stronger than others. So it might look a little bit confusing at first, but really it doesn't take that long to get used to it. What we're looking for in most cases is confluence. So we're looking for the signal parameters were all to be in sync. So we're looking for the bar color to be in sync. We're looking for the signal to be in sync. We're looking for the filter down here to be in sync. Now I'm going to come back to the Raptor in just a moment. I'll start here with the Hawk. And I'm going to show you just a couple of the basic signals that we look for in the Hawk. You're going to notice the Hawk, because it's the scalping tool, generates signals a little bit more quickly. Right? So we've got a lot of signals going on here, but out of all these signals, the primary signal is this one right here. That's what we call our first micro-macro crossover signal. Very, very strong signal. You're going to notice we have another one right here, but this one went to the downside. And since this is our scalping tool, we have a high probability scalping target, And I can tell you in both instances, the market easily reached our profit objective. In fact, that's what I'm missing this morning. I haven't loaded my trade manager yet. So let me put the trade manager on here. So this is a very high probability signal for the hawk. In fact, one of these days in the trading room, what I should do is just take first micro-macro crossover signals. You will be amazed at how well those signals work out just by waiting for that one signal. The hawk also has a filter down here. This is a momentum filter. It will help you gauge whether or not the market is ready to take a signal or not. And as with the other tools, we're just looking for confluence here. We're just looking for everything to be in sync. So this first micro-macro cross signal, green bars, green trend lines, green filter, that tells us it's time to go. You're going to notice here that the hawk also paints yellow bars. Yellow bars are very neutral. And the yellow bars are great because they tell us when it's time to stand aside. People are always asking me, Eric, how do you trade a choppy market? Well, first off, to trade a choppy market, you have to recognize you're in a choppy market. And this is where the hawk really shines. It shows you you're in a choppy market because your bar colors keep changing. Oh, by the way, before I forget, if you want any more information about any of these tools, you can follow this link that I'm posting to you right now. Okay, so here the hawk, I know we're in a choppy zone because look at the bar colors. There's no consistency here. We're getting a lot of yellow bars. Our filter is breaking up. That's telling me that this is not a prime time to be trading. In fact, what you could do is you could just highlight this whole trading range and say, well, I'm going to avoid this market until we get outside of this range. So the hawk, very, very good at identifying choppiness. Oh yes, I was telling you, people always ask me, Eric, how do you trade a choppy market? Well, the best way to trade a choppy market is not to trade it. Choppy markets, by definition, are not trader-friendly markets. Choppy markets show actually a very happy market. Believe it or not, these kinds of markets give us fits as traders. But from the market point of view, this is actually a very happy market. Traders are perfectly content to be trading somewhere around 4190 to 4210. They're very happy with the NASDAQ at that price. Oh, by the way, I'm also watching the NASDAQ on this monitor. I have the YM and the E-mini on my other monitor, so we're watching all the indices today. However, if you'd like me to take a look at any other market, I would be happy to do so. Let's take a look now here quickly at the Falcon. And I'll load my trade manager on here also. We'll get to the trade manager in a moment. Now the trade manager, the Falcon, you're going to notice that we have this colored trend line running through here. This trend line is going to give us our directional bias. And like the other tools, we're looking for everything to be in sync when we take a signal. So here's a very strong signal on the Falcon, which came right out of the open. This is what we call our trend change signal. And it's pretty easy to identify because our trend line changes color, and it's the first signal really that comes into sync after the trend line changes color. So you're going to notice we have a green trend line, green signal, green bars, and a green filter. A few moments later, we have the next strongest signal on the Falcon, and this is a little bit of a coincidence. It doesn't really work out this way usually. We have what is called a late filter entry signal. The late filter entry signal, again, shows us a lot of strength, because what happens in the late filter entry is the filter goes out of sync, but the trend line does not. Very, very strong signal on the Falcon. When this happens and everything comes back into sync, you're going to notice we have our triangle and hash mark. And this is the type of signal that generates very good results. In fact, it's a signal that I'll take almost blindly. So here was the trend change signal to the upside. Here's a late filter entry signal to the upside. Oh, here's actually a trend change signal to the downside. Notice the trend line changes color. Here's the first signal that generates, that's in sync. And we have a very nice little progression to the downside. So this is the Falcon swing trader. The Falcon also is pretty good at pointing out choppiness, because your trend line is going to start moving like a roller coaster ride. See, we're just going sideways, no discernible direction here. Our filter is all choppy, breaking up, back and forth. So when you see this happening, really it's probably best to avoid a market like this, or just identify the range. And then once the market gets outside of this trading range, well, then you can consider trading it again. There's my little tip for you this morning. A lot more choppiness going on. As you can see, again, it looks very much like a roller coaster. All right, let's go to the Eagle Trend Trader now. And now the Eagle Trend Trader, you're going to notice I'm going to go back to yesterday, because today obviously we're not trending. See, you want to know what a choppy market looks like? Here's the trend trader saying, no, there's no trend going on here today. Our band, this is our directional band running through the market, going back and forth. You can see no follow through on any of the signals, and I'll explain all those to you in just a moment. There was actually some profit opportunities there, but it would have been a little bit of a nail biter. Okay, so this is what it's supposed to look like. This is the Eagle Trend Trader, and it's very good at picking up market trends, as you can see. Yesterday, the Eagle was just screaming to the upside, and I think we had a big move lower as well. Yes, we did. So we had a nice move lower. So some rather substantial swings in the NASDAQ yesterday. And you can see, once again, when things start to fall apart and you start to lose the trend, it becomes fairly easy to discern, because our directional band keeps flip-flopping back and forth. So this band that you see running through here, this gives us our directional bias on our signals. So we refer to this bottom edge as the soft edge, and we refer to this edge here as the hard edge. When the soft edge is below the hard edge, we're looking to sell. When the soft edge is above the hard edge, we're looking for buy signals. In most cases, we're looking again for confluence. So we're looking for signals like this, where we have green bars, green warning dots, green filter. This would be a fairly strong signal, and we would be looking to buy in this instance. And you can see that the trade had a very nice result. Here, whenever the market trades back into the hard edge of the Eagle, that's this edge right here, we're always looking for a reaction. So that's a very good cue that the market might be doing something. This signal that you see here, now I've been telling you so far that we're always looking for signals that are in sync, but each of these tools are unique. These tools are not just the same tool bumped up to the next higher time frame. You know, a lot of people will look at a 5-minute chart for their scalping trades. They'll look at a 15-minute chart for their swing trades and an hourly chart for their trend trades. That's a very rough approximation of what these tools do. These tools have been specifically programmed to find scalping trades or swing trades or trend trades. So they all have their own unique characteristics. And this is one that is unique to the Eagle Trend Trader, and it's called the red bar buy off of a hard edge bounce. So whereas we're normally looking for everything to be in sync, here's actually a signal where the market retreats back to the hard edge, the bar colors change over, but then we generate a buy signal. So what does that tell us? Well, that tells us that according to the Eagle, the market drifted low enough to actually change the bar color. So it looked here for a moment that the sellers were going to take control of the market, but then the buyers jumped all over them and actually fulfilled the trade parameters for a trend and gave us a green buy signal. Very, very strong signal in the Eagle, and you can see that had a very nice result, very high probability signal. Here is the counterpart, the bearish counterpart. This is called a green bar sell. Now notice once again, we come into the hard edge of the Eagle, and we're ready to expect some sort of reaction. So the buyers are making a big push because the bars have been red and now they turn green. But the sellers take it back and they generate a red sell signal, red warning dot, red triangle and hash mark. And then we actually get a progression lower. Now you're going to see this squiggly line that runs through here. This is an ATR line. Mike Filiguera, who is the fellow who trades the stock market with the DTS system, was fond of this line, and I've actually added it to my charts also. It's part of the DTS package. This is actually an ATR line, an average true range. And we use this as a little bit of a filter to gauge the entry. So we're actually waiting for the market to come into sync. So we actually would have entered below here. For those of you who are looking at these green bar sell signals here, I wouldn't have necessarily taken them right on the hash mark. I probably would have waited for them to violate the ATR, and you can see why. Because this signal failed. Now, there's the thing with the DTS system, and I'm only going to mention this quickly because I don't want you spending all your time looking for counter-trend signals. But these signals are so strong and so reliable that when you have a failed signal, you can almost always anticipate the market to reverse and head the other direction. So very often, I will use a failed signal like this as an early warning. I won't just go right out and start buying, a failure above the highs. Rather, I might use it as an early warning that the market is reversing. And sure enough, a few bars later, we actually generated a buy signal, which was in sync. So you see right here, we have the green warning dot, green triangle hash mark, green bars. Filter is in sync. The ATR is in sync. And this is a very clear, okay, let's buy this market signal. And away we go. All right, let's, it's nice to see we're not missing anything today. Last but not least, let's take a look at the Raptor. I see JP is asking about the Raptor. Hold on one second here. I'm going to throw the trade management software on the Raptor. JP is asking about costs and such, that link that I posted, I'll post it again in case some of you didn't get it. If you follow that link, you'll get all the information on pricing and packages and so on. And I'm also going to give you an email address because Adam, if you have any questions on pricing, Adam is the fellow you need to talk to. And that's Adam at indicatorwarehouse.com. Yeah, Tony's asking for crude oil. Definitely, Tony, I will get crude oil up for you. And Mark is asking about targets on the trend chart. Mark, bear with me just a moment. I will answer your question on targets in just a minute. Let me just quickly go over the Raptor. The Raptor, as I said, is a combination of the other three birds. It's taken the best elements of the other three and incorporated it into one chart. Now, the Raptor has its pros, it has its cons. Its pros is that it's very easy to use. You know, everything is on a single chart. You don't have to be scanning 3 charts for opportunities. I should mention that all the tools come with audio alerts, which makes it much easier to trade multiple markets at the same time. You know, I'll hear scalp alerts, I'll hear swing or trend, and that tells me that I need to look at those particular tools. So I can, when I was doing the DTS profit run before Raptor came along, I was watching actually 4 markets at the same time. So if I heard scalp, all I had to do was look at my 4 scalping markets, my 4 charts on my hawk, and see which one was generating a warning dot. Likewise, if I heard swing or trend, I only had 4 charts to monitor. Now that we have the Raptor in the mix, I'm just following 3 markets because I need the extra real estate for the Raptor, but it works the same way. The Raptor and the other birds will all generate audio signals so that it makes it easier for you to scan the markets and scan the opportunities. Now I'm going to dial back because you can see here the Raptor again shows a lot of choppiness going on. Like the hawk, the bar colors keep changing. The filter, which is actually the whole programming for the Eagle Trend Trader, is in this filter here in the bottom. Tells us that the market is just breaking up quite a bit. The Raptor has adopted the Eagle band for directional bias. And the main signal generation engine behind the Raptor is based largely on the Falcon. So you can see we have all the elements of the 3 birds packed into one. Okay, let me dial back to yesterday so you can actually see how the Raptor works. The Raptor, the easiest Raptor signals that we're looking for we're looking for those signals that come in sync. So you're going to notice a few signals firing through here that we wouldn't necessarily be interested in. What we're looking for is our band is bullish in this case because the soft edge is above the hard edge. So we would be looking for a signal to generate coming out of the band where everything was in sync. So even though the Raptor generated a signal right here, this is actually our best signal printing right here. This is our first in sync signal. So the Raptor tends to sacrifice quantity of signals for quality of signals. You can see here was another one right here. This one all developed on one bar. You don't see the warning dot anymore. But when it was printing, we had a warning dot, triangle, and hash mark. The Raptor comes in to the band, comes out of the band, everything is in sync, and you can see we had a nice little progression from there. Here's another signal where everything is in sync. The Raptor also has a characteristic we refer to as a double pullback. Let me see if I can find you a double pullback signal. That one didn't last very long. Okay, here you go, folks. This is something you're not going to see in any other trading room. Pay attention, because no other trading room moderator is going to show you this. I can almost guarantee you. All right, here's the double pullback signal. And now this is normally a very high probability signal, and it occurs when the market makes a double pullback into the hard edge of the trading band. Now actually I was wrong. I thought I was going to show you a failed trade, but it wasn't a complete signal. Darn it. Darn it, the signal didn't fail. All right, well, the double pullback signal occurs when the prices make two moves into the hard edge, and like the eagle, we're expecting some sort of reaction when we get this. And the Raptor did come out. This is not a sell signal because our filter is not in sync. I thought this was going to be a failed signal, that I was going to show you a failed signal, but that's not true. This is a slight variation of a double pullback, and you can see here the Raptor came out, was in sync, and actually did reach our profit objective. So, okay, so it still worked, even though I thought that was going to be a failed signal. The point I was going to make is that even though these signals are very strong, they're not 100% accurate. So, sorry to say we haven't figured out a way to generate a signal that is correct 100% of the time. But because signals are never 100% accurate, we have this other handy dandy little tool right here called the Trade Manager, which I'm going to get to in a moment. Okay, one thing I did forget to mention to you, because I've taken it for granted for so long, I see a few people asking here about the bar style. The bar styles are the mean Renko bars. Now these have been specifically developed for DTS. I do believe you can purchase them as a standalone. The beauty of the mean Renko bar is it combines all the strengths of a range style bar, like a Renko bar or a range bar, but it adds the sensitivity of a candlestick. So you have a very good feel for who is in control of the market. It's very clear where the buyers and the sellers are. So for instance, here we're looking at the Falcon, and yes, the market is still very range bound, but we can see that, the sellers have made a push lower, and this is where the sellers are digging in, or the buyers are digging in, 41.97, right? It's very obvious. They bought here, 41.97, they're buying here, 41.97. So what happens next? The buyers rally it up, and the sellers are defending 42.08. Very obvious. Market comes down. Oh, buyers are stepping up a little early. They're starting to buy around 42.01. So what does that tell us? It tells us that the buyers are showing more aggressive behavior. They're getting anxious to buy. And lo and behold, we also have a late filter entry signal. Did you spot that? See, our trend line did not change color. Our filter did go out of sync, comes back into sync. This is that high probability signal I was telling you about. And look at the result. We can see quite plainly that the buyers have control of the market. Here's a high probability buy signal right there. And look at that follow through. See, so that's what makes these tools so powerful. And the mean Renko bars, well, when Adam first approached me about them, I was reluctant because I was a 5-minute chart trader. That's all I'd ever traded, really. And after using these for a week, I told Adam I would not go back to a 5-minute chart because you cannot see what we just saw on a 5-minute chart. In fact, let me put it on a 5-minute chart. A lot of people don't know this, but you can use your DTS system on other chart styles. So if you like, a 450 tick chart, or if you like volume charts, or really any chart style other than point and figure, the DTS system will still generate signals for you. But here's that bar that we were just looking at, this whole range. This is on a 5-minute chart. It doesn't show us nearly what we were just looking at on the mean Renko bars, does it? The mean Renko bars gave us so much more information. Now we have suggested bar sizes, and for 99% of the markets, the default bar sizes will work. But for some of the instruments, like the E-mini or the grain markets or the euro, instruments that trade at 1250 a tick or higher, we have different settings. Or if you're ever confused about a market, feel free to contact us and we'll give you what the suggested settings for the brick sizes are. But don't be surprised if I write you back and say the default brick sizes work for 99% of the markets, which is what I end up writing most people who ask about brick sizes. Heinz is asking, what is the criteria in the Raptor for choosing the mean Renko bar size? Good question, Heinz. The brick size, because the signal generation engine is based primarily on the Falcon, we go with the 8-tick brick, which is the default brick size for the Falcon. The filter is set at a 12-tick, as is the band, which are the default sizes for the Eagle. And the bar colors are based on the Hawk, and that would be the 6-tick size, which is the default size for the Hawk. All these things are fully customizable, however. So if you go take a look at your tools, you can see that you can change the parameters to your liking. I know a few people like to tweak, so the Raptor allows you a certain amount of tweakability, more than the other DTS tools. The other DTS tools are pretty much locked. Thanks, James. James says we're testing yesterday's 10 a.m. high. And thanks for pointing that out, James. It's amazing, this whole 10 a.m. phenomenon. Jim's kind of put me back on it. I neglected it for quite a while, but there's this, what a lot of traders do is they'll watch the 10 a.m. price because they know that the big traders, and I'm using air quotes, big traders, will usually hold off trading the first half hour of the session because things are too choppy, and then they'll dump their orders about a half hour in, or start dumping their orders half hour in. And that can make for some pretty significant highs and lows. So thanks, Jim, for pointing that out. Yes, Heinz says 10 a.m. and 2 a.m. reversals. That's right. Bob's asking about stops, and I'll get to stops. Let me throw crude oil on here because I had a request for crude oil earlier, so we'll take a look at crude oil. Walter is asking about trading room results for each bird. I don't have them broken down by bird. I do have the results written down, but I'd have to go through and compile it by bird. I don't know if Adam still has something up about the previous profit runs. Now the profit runs, thank goodness, the 3 times I've done the profit run, we had very good results. When I do the profit run, the sole purpose of the profit run is to see how much I can earn over, I think we do it for 2 months. So I do some very quick trades. I do a lot of trades during the profit run, but we'll talk about the profit run here in a moment. Okay, so this is crude oil. And you can see that here we had our first micro-macro cross signal. Hooray! And nice follow through on that. Here's a first micro-macro cross signal that did not engage to the downside. So again, it's one of these signals, very, very strong. If it fails or doesn't engage, you can probably expect the market to move the other way. Oh, big decline in crude oil here. This happened very quickly. We didn't get our first micro-macro cross until down here. This is unusual. Normally, the first micro-macro cross will develop here shortly after the trend lines cross over. Now, I should mention as well that these tools have a lot more going on in the background than what you see on the chart. We've tried to simplify the charts so that it makes it easier for you to interpret the signals. But there's actually about a half a dozen things going on behind the scenes, signal parameters that have to be met before the tool even generates a signal. Because I get people asking me all the time, what are these trend lines? What are the moving averages on the trend lines? Don't bother trying to crack it, because believe me, folks, if trading was as easy as just picking the right trend line combination, we'd all be multimillionaires. But the signal generation is based on a lot more. The hawk actually takes a look at certain price characteristics that have to be met before a signal is generated, as well as certain momentum factors and a whole slew of things. And that's true for the Falcon and the Eagle as well. Here's a macro pullback signal, which is another very reliable signal in the hawk. You're going to notice here that we had a couple signals flash in between. So here's our first micro-macro cross signal. Here's our macro pullback signal. We had a couple signals here in between. I probably would not have taken those signals. People don't usually see me take those signals. And the reason is I know that these signals don't match our signal parameters. And what do I mean by that? Well, hold on a second here. I'm going to show you the cheat sheet for the hawk. So here's the hawk cheat sheet. And this shows you the 5 basic signals that we look for. So here's our first micro-macro cross. Here's our macro pullback. Here's our 4-arrow consolidation. Here's our post 4-arrow consolidation. And here's our red bar buy, green bar sell. But you're going to notice there's a bunch of signals that go on in between that I don't mention, right? It's because those signals aren't as high a probability signal as the 5 that we normally look for. So here's our first micro-macro cross, high probability signal. Here's our macro pullback signal, high probability signal. These signals down here, they don't sync up with anything. Even though both, these signals here and these signals here eventually did work out, I didn't know that when this was unfolding real time, right? When I'm printing a signal down here, I don't know it's going to go lower. However, when I'm printing my macro pullback signal, I have a good idea that this is going to be a high probability signal. Same thing back here. You know, the market comes out of all this mess, prints a first micro-macro cross signal. Well, I know that's a high probability signal, so I can take that. And you can do this exercise on your own as well. It's really good if you're a new DTS owner to go through your tools and find your first micro-macro cross signals and see how well they work so that you can gain some confidence in it. Look, here's first micro-macro crosses. These all hit our high probability profit targets. Here's our macro pullback, hit our high probability profit target. And once again, you know, first micro-macro cross. So even though it doesn't look like the market is doing very much, look at all these opportunities that we've had, and all we're looking at are first micro-macro crosses and macro pullback signals. And this is only one tool. Okay, so right now, crude oil, not showing the love. Not a whole lot going on here. These are not macro pullback signals because the bar color has changed to yellow. Remember, we want things to be in sync. So here we had a first micro-macro cross, green bars, green trend line, green filter. That one was in sync. These are not in sync, so that is not a signal I would look at taking. Let's take a look here at the Falcon. Again, breaking up quite a bit. We did have a trend change signal right here. This one probably coincided with the hawk scalp signal. Let me turn this off. Right here. Nice progression higher. Here was a trend change signal to the downside about a half hour after the open. Nice little move lower. But right now, look, our filter is breaking up. Our trend line is breaking up. We've lost any sense of direction. And I don't know what it's like in your part of the world, but here, because crude oil all of a sudden rallied $5, gas at the pumps has already gone up twice. Scoundrels. All right, let's take a look here at the Eagle. Oh, I have an idea why we're getting that hesitation in crude oil. Look at that. We're into the hard edge here on the Eagle. We've generated a green bar sell. This is a bearish signal for crude oil. So it looks like crude oil might be getting ready to head lower. So the band very much in a bearish mode. The market has retreated to the hard edge. And so we have a sellable signal here on crude oil, on the Eagle. Let's take a look at El Raptor. We have a double pullback into the hard edge. This looks a little more like what I was looking for. So we have the double pullback into the hard edge. Now remember, we're expecting a reaction whenever we hit the hard edge. So now we're waiting for the market to come out of this and generate an all red sell signal. Remember, the Raptor will not be your fastest tool. So we may have to wait for an all red sell signal. This is a yellow-red combination, but it looks like it might work out all the same. So it looks like crude oil possibly retesting the lows. We did get, while we were looking there at the Raptor, we did have our trend change signal come into sync here for a little bit. Just a quick mention of the secondary tools that you see on here. These tools are all available as a standalone, and they will work on any chart, not just DTS charts. So here on the Hawk, I have a tool called the Day Ranger. And the Day Ranger tells you your average daily ranges and your current range. So you get an idea as to, well, what kind of range to expect out of the market. So you can see the average 5, 10, and 30-day ranges for crude oil are hovering around well, 220 to about 275. The 5-day range is quite high at 277, so that tells me that crude oil's ranges are actually expanding. Crude oil is becoming more lively. Today's range is just under 200, and the range from yesterday was 435. So the way you can use this tool is you can use it to see whether the market is nearing its average range. So at 200 ticks, crude is probably pretty close to its average. Say we're going to average all this out at about 250 ticks. We might expect about another 50 ticks out of crude oil today. Another way you can use this is you can use it for setting profit and stop loss targets. So let's say you calculate the average range at 250 ticks. And let's say you're going to use 10% of that as a stop or 20% as a stop. So that would say, well, I'm going to use 25 or 50 ticks as a stop. Well, and you can do the same thing with your profit target. Let's say you're going to say, well, I'll take 10% as a profit target or 20% as a profit target of the average range. So that when crude oil or whatever market you're watching becomes, the ranges begin expanding, well, you can expand your stop losses and you can expand your profit targets accordingly. And when the market becomes quieter and more constricted, well, then once again, you can adjust your profit and stop losses accordingly. And you can get information about the day ranger at that link that I posted earlier. Here on the Falcon, I've placed the Ultimate Support and Resistance Suite. Now, I'm quite proud of these. I developed these. These were a long time in the making. There's a whole lot of math behind these, let me tell you. It's an assortment of support and resistance lines. No, these are not pivot points. No, these are not Fibonacci retracements. If they happen to coincide with a pivot point or a Fibonacci retracement, it is pure coincidence. It is an assortment of 21 support and resistance zones forecast for the current trading day. And the lines are calculated based on prior price action. So you're going to notice out of the 21 lines, we have a gold line and two blue lines. The gold line is the median line. It shows us, well, that we have 10 lines above and 10 lines below. The blue line directly above is the primary resistance. The blue line directly below is primary support. If the market is trading below the median line, it's going to be more bearish than bullish. If it's trading above, it's going to be more bullish than bearish. Pretty simple, right? When the market violates a primary support line or the primary resistance line, we can usually expect it to move two zones. So here's zone 1, and you can see it came down to zone 2, and we're seeing a little bit of reaction off of this line. Some people like Omar El-Tuki, who is the Forex trader using DTS, he likes to use the support and resistance lines to confirm entries, and he also uses them as profit objectives. So Omar would be looking at this sell signal here, and he'd probably have his entry just below the support line, and he would use this other support line down here as a profit objective. That's how he likes to use them. But, there's variations. You can use them with typical pivot point strategies. If you want to buy a bounce or sell a bounce off of the lines, that's perfectly acceptable too. So that's the support and resistance suite. That is also a standalone, works on any chart, not just the DTS charts. Here on the Eagle Trend Trader, in the top left corner, I have a tool called the Trade Forecaster. The Trade Forecaster also goes with any chart style or works on any market that you can plot on a NinjaTrader chart. And the trade forecaster tries to forecast what the current market condition is. And it does so by looking back into the history of the chart and comparing what happened in the past and forecasting it into the future. Much the same way as a weatherman will use history to predict what the weather will do today. So whereas a weatherman will look at, wind speeds and barometric pressures and cloud formations and humidity and those types of things to say today is going to be sunny or today it's going to rain or snow, trade forecaster does a similar thing, and it looks at the market environments and says, okay, right now we have mostly a swing environment, and it should stay a swing environment for about another 8 minutes, after which it's going to go into a scalp mode. So it's a great confirmation tool in that respect, and fortunately it is more reliable than the weatherman. It doesn't necessarily mean that you need to concentrate just on trading the associated tools, so that right now it's in swing mode. That doesn't mean the only tool you need to concentrate on is your swing trader. But what it does tell you is that, we're moving into scalp mode, so we can expect the market to remain choppy. So maybe we're going to run tighter profit targets. Maybe we're going to run slightly looser stops. And when we're in trend mode, it doesn't necessarily mean that the market's going to take off like a rocket, although very often it will. But it suggests that, okay, when it's in trend mode, it doesn't mean the market's going to scream lower, but rather that the pullbacks will tend to be minimal. Right? We're going to only see minimal pullbacks. We're not going to see a monster retracement and then the trend resume. So again, it allows you to plan your trades accordingly. If you know the market's not going to make major retracements, maybe you can run a tighter stop. Maybe you can go with a larger profit target, and so on. All right, so I'm also very helpful for identifying choppiness. Okay, so not much going on in crude oil at the moment either. I'm going to go back to the NQ because next I'm going to focus on the trade manager. All right, oil report today. That's what's going on. Thanks, Bob. Forgot oil report out today at the bottom of the hour. Bob says, seems like the features of the Raptor would help with discipline and all the features. Actually, that's a very good observation, Bob. A lot of times what we'll do in the trading room is we'll actually look to the Raptor to confirm what we're seeing on the other charts also. So if we're getting, a sell signal here, we're getting sell signals on the Hawk and the Eagle and the Falcon, we'll be looking at the Raptor and say, yeah, okay, the Raptor came out of the cloud, generated a sell signal, so there's a lot of confirmation there in the Raptor. Okay, now I'm going to talk a little bit about the trade manager, and this is very important. Really, I cannot stress this enough. There's 3 components that you need to have to be a successful trader. Most people only concentrate on the one. Most people only look at entry signals. Most people think, oh, if I can only find a good entry signal, if I can only add this indicator, or if I can only tweak my RSI properly, or if I can only find the right combination of moving averages, I'll eliminate those losing trades and I'll be a successful trader. Right? Don't lie to me. I know. I know. But having a good signal is important, but it's only one part of the equation. You actually need three things to be a successful trader. One, you need a reliable entry signal. No question. Entry signals are important, but they're not the reason you're not making money trading. Two, you need a way to manage your trade. Some people have incorporated the second step into their trading. They've moved beyond solely focusing on the entry signal and have started to incorporate trade management of some sort. That's what these blue dots that you see here on the DTS system are. This is our stop strategy from our trade manager. And Trade Manager actually has 16 different stop strategies to choose from. So depending what the market environment is, you can adjust them accordingly. And each one is fully customizable. So whether you want it to be more aggressive or less aggressive, you can choose, like I say, from 16 different stop strategies, and you can adjust them to your liking. So today we have a market that's very choppy, so maybe we want to go with a wider stop. And I know right away you're saying, wait a minute, Eric, I can't afford wide stops. Well, that's because you're missing the third piece to the trading puzzle, and that's money management. This is the part of trading that most traders are woefully ignorant of, and this is probably the reason you are not making money as a trader. Yes, it is that important to your trading success. Money management means that you never risk more than you can afford to lose, because let's face it, folks, trading the left side of the chart is easy. I always loved how Ray Burke said, I'm good at trading the left side of the chart. Trading the right side of the chart's a little bit more difficult. Right? Anybody can trade in hindsight. My cousin is great at trading in hindsight. He looks at a chart and he says, wow, Eric, if we had sold it up here and bought it down here, and if we had bought it down here and sold it up here, yeah, that's great. That's great, Marvin. Problem is, it's not so easy to do when it's unfolding, or when you have the market peeling against you and taking back half your profit. You know, it's not so easy to hang tough. So what do? Well, like I said, you never risk more than you can afford to lose. As a rule of thumb, you should risk 5% or less of your trading capital. Of course, that's a sliding scale. The more trading capital you have, the less you can afford to risk, and vice versa. The less you have available, the more of that you have to risk. But you should endeavor to never risk more than 5% of your account. And why is that? Well, it's because there's a very real statistical probability, and professional traders know this, that they can take 10 losing trades in a row. So if they traded like most traders who fail trade, and they're risking 10% or more of their trading capital on a trade, and they take 10 losing trades in a row, let's see, 10 times 10%, oh gee, that's 100% of their trading capital down the toilet. So they effectively busted their account. Or even if they had risked, say, 7 or 8%, they've still decimated their account to the point where it's probably beyond recovery. But if you risk, ideally if you risk 2%, and I realize that for some of you who are trading $10,000 accounts or less, this is going to be a difficult number for you, but I'm going to show you some solutions in a moment. If you risk 2% of your trading capital, or ideally 5% or less, you give yourself some staying power, and you take a whole lot of pressure off of your trading. How do I mean that? Well, let's take a look. Let's shut this down for a moment. Let me find a good example. Okay. Yeah, okay, this will do. This is what most traders do, right? They're going to say, "Oh, I'm going to be conservative. I'm going to enter here on the hash mark because I got a signal, and I'm just going to cover it right above the high of the bar, and that's going to be my trade." Well, what happens is, well, the market brings you in and then goes against you a couple ticks, stops you out, and then goes on or tries to go on to your profit target without you, right? Meanwhile, you've incurred a loss already. So what's the solution to that? Well, the solution is to run a deeper stop. Oh, here, let me do this again. Notice the dollar amount that I have at risk here with the tight stop. Now, ignore for a moment that it's $480. This is the amount that is relative for me. This is 2% of my trading capital. If you're trading more or less, it's going to change for you. But for the moment, let's just pretend that $480 is an amount that we can afford to lose. Watch what happens if I run a deeper stop. Let's say I put my stop above this little swing high right here. Oh, look, we're still risking, well, a little bit less because of rounding, but we're risking about $435 on this trade. Okay, what if I choose to run the stop a little deeper still? What if I want to cover it way above this swing high up here? Oh, look at that. I can still take this trade. But look, the risk amount never changes. I still have $470 at risk. All right, let's try one more. Let's go way up here, way above the swing high. Oh, rounding error. I'm going to go even further. I'm going to go way above the swing high, way up here. Oh, look at that. I can still take this trade and my risk amount never really changes. Yes, it rounds a little bit. Now, which trade do you think has the greatest probability of success? Now, we're not talking risk-reward ratios. I can talk to you an hour about how risk-reward ratios are not your friend. Which trade do you think has the greatest probability of success? Well, actually, let's start with the two extremes. This itty-bitty trade down here or this great big trade up here? Which one do you think has the greatest chance of reaching the profit target before hitting the stop loss? Well, obviously, the one with the deeper stop, right? So why would you strangle your trade when you can risk the same amount and increase your probability of success? Let that soak in for a moment because that's very important. This is how professional traders do it, folks. They balance their stops so that they don't get stopped out prematurely. There's only one thing worse than a losing trade, and that's a losing trade that would have been a winning trade if you had your stop a little bit deeper. Now, I'm not saying you have to risk it way up here all the time, but you know, a reasonable stop on a trade like this would at least be right here, maybe even right here. Now, notice what changes every time I select a different stop. It's not the risk amount, rather it's the quantity that changes. So unlike what most traders do where they keep their position quantity the same, they say, oh, I'm going to be safe. I'm only going to trade 2 contracts every single time. And then they vary their stop placement. I'm keeping my risk constant and I'm adjusting my position size. So what actually changes is the number of contracts I have in play and the potential profit as a result. But remember, trading is more about probabilities. You want to set yourself up for a high probability trade. You know, we've all seen these spam emails that end up in your inbox. New trading system performs 87.7% of the time. Well, you want to know how they do it? They run tight profit targets and they run loose stops. You can do that too. But when you're running a bigger stop, remember you have to keep your risk amount constant. And this is where the trade manager shines. It does this for you automatically. So never again will you risk too much on a losing trade. But that's only half of the equation. The other half of the equation is, well, what do most traders do? Most traders say, oh, I'm going to be a conservative trader. I'm only going to take one contract. I'm going to set up the trade. Okay, Eric says run a deeper stop. I'm going to run my stop up there. And they come down and they hit their $50 target. And they say, woohoo, look at me. I'm a smart trader. I only risk one contract. Okay. It's true. If this trade went south, you would have lost less than what I would have. But remember, at no time, even though this is $435, at no time am I risking more than I can afford to lose. That's important feature number one. Important feature number two, you've made $50 on target. I've made $150 on target. So I've tripled your profit. So not only does Trade Manager prevent you from losing more than you can afford, it also correctly capitalizes you so that when you do have a winning trade, you maximize your profitability. Now, those of you who have been in the room before have heard me talk about a fellow by the name of Derek. Derek's like our poster child. Derek came to us. He'd been trading for a while. He was, one of these guys who was a onesie-twosie trader. And it wasn't until he got a hold of DTS and Trade Manager that he started making some serious money. And this is why, because all of a sudden he was correctly capitalized. He said, I used to win a few, I used to lose a few at the end of the day. I'd come out a little ahead or a little behind. But when he started correctly capitalizing himself, then he started making some serious money. So serious that he left his day job. So serious that he actually started soliciting funds and is trading other people's money now. It cannot be overemphasized. If you are wondering why you are not making money, it's because you don't have all three legs of the trading stool. You're still on leg number one, concentrating on trying to tweak your entry so that you don't have a losing trade anymore. Forget it. Trading is not about being right 100% of the time. Now, unfortunately, we're looking at all winning signals here. But let's say I did take a losing signal. Let's say I did set this up. Let's say I took this signal right down here. This isn't really a signal that we would take, but let's say I took it anyway. And let's say I risk it to here. Let's say I saw, old support should be new resistance, right? So I take the signal and, I took a losing trade. Okay, it's going to happen. You're going to take losing trades, but what's more important here is that I did not lose more than I could afford. Yes, a $400 loss, very unpleasant. Not something I like to do, but there's a certain degree of comfort knowing this was an amount I could afford. Now, for you, it might be less. If you're trading a $10,000 account and it would be $200 for you that you took a hit on. Okay, well, $200 isn't going to ruin you. But honest to goodness, folks, I've seen people blow up $20,000 accounts. Well, I haven't seen it personally, but they've come to me after blowing up a $20,000 account in a single session. How is that possible? Well, it's possible because you're doing stupid things, right? You're concentrating, you're chasing the market, you're taking poor signals. Instead of waiting for a high probability signal like the macro pullback signal here, you're taking poor signals and you're not employing good money management. You're risking far more than you can afford to lose. That should be obvious. And you don't have any management skills. So here, Trade Manager, like I said, we've got 16 different stop strategies to choose from. They're all fully adjustable and customizable. You can tweak them to your liking, to follow the market. If it looks like it's following the market well, then you can go with that. We have high probability targets for each of the tools. And you can also set manual targets. So let's say this isn't the first micro macro cross yet, but let's pretend that it's building into a first micro macro cross. And I can set my own profit objective as well if I want to do that. We have different order types to choose from. There's also OCO orders. So you can bracket your orders. We have to enter the OCOs slightly differently, and these are live the moment you put them on the chart. So I have a tendency to put them away and then scroll them in to where I want them to be. And you can do multiple OCO orders. OCO stands for one cancels other, for those of you who are new to trading lingo. And they're usually used to bracket the market. If the market's going sideways, you don't know which way it wants to go. A lot of times you can set OCO orders. You'll see these OCO orders are all paired. So here's OCO 1, OCO 1. If I cancel the one, the other cancels along with it. Here's OCO 2, OCO 2. If I cancel one, the other cancels also. So Trade Manager, a very, very powerful tool. For protecting you and helping you capitalize on your profit when you get it. The Raptor has a slightly different variation of the Trade Manager. This one is called the Trailblazer. You can see it's almost the same thing but different. It doesn't have the trade management component down here. But it is a little bit more simplified in that you can enter your orders directly on the chart. So let's say we're going to sell, and let's say we're going to sell just below this bar. Now notice my stop strategies are right down here. But Trade Manager or Trailblazer, once we engage the order here, actually automatically recognized that the stop strategy was against me, so it gave me a stop on the other side. Now you'll notice once these orders go live, I can move them around wherever I want. And we also get a display here. This wasn't a signal, I'm just demonstrating this, but we can either see it in dollar amount. Oh, come on, don't stop me out just yet. We can see it in dollar amount or ticks or percentage of your account or not at all. If you're like me, you probably find these things distracting watching them go by, so a lot of times I'll turn them off. Now, the nice thing about the Trailblazer is that you can preset your profit targets. So I have a preset target here. I preset my quantities. So I've actually set a quantity of 2. One contract I want to take target on 20 ticks. The other contract I'm going to leave open. So it has a 0 target. It's going to be a runner. And we also have a whole assortment of stop strategies to choose from here also. So let's see. And we can preview our stop strategies also. No, that's not going to work. I'm going to have to go with a fixed tick. So I'm going to go 10 ticks off of the high. And now Trade Manager will automatically manage my position for me. So hopefully it's going to head a little bit lower here so that you can see how Trade Manager, or in this case Trailblazer, automatically rolls the stops for me. And this is a great help when you're watching multiple markets. So this enables you to easily manage several open positions at once. This was very helpful during the profit run where I would often have 2 or 3 open positions at the same time, and I would let the trade manager component manage my trade for me. Okay, come on. One more. Let's roll these stops. Now you'll see here that it actually printed a higher dot. That's because it went off of this high here, but it didn't move my stop back. So the software knows not to move your stop away if the market is going against you. All right, there you go. So you see it took my stop from here and automatically rolled it down, and it will continue to roll it as the market, or if the market continues lower. So this frees me up to look at other markets, look at other opportunities. I no longer have to monitor this trade. I know that if it goes 10 ticks above the high, I'm going to be stopped out. So when it eventually reverses. Now we also have a break-even button here. So if you're feeling the pain, you can roll the trade to break even. It won't let me do it right now because, of course, we're not below break even just yet. We were there just for a tick. But you can see some very powerful features here. We also have the buy market, sell market buttons. These are great if the market's moving a little bit fast and you just want to get in. You can just hit the buy market, sell market, and you will automatically get a stop in play also. So you're never left exposed to the market, right? You'll always have some sort of protection in play. If the stop strategy is in sync with your entry, your stop will default to the stop strategy. If your stop strategy is against your entry, then you'll get an automatic 10-tick stop or whatever you preset. You can actually preset what your default stop will be. So let's just get this a little bit lower. I'm going to show you the break-even feature. Come on, get down there just a little bit. Would you? I'm trying to make a point here. So currently it's at a break-even +1. I just need it to go 1 bar lower. They're very flat today. There we go. Okay, so I hit the break-even button. My stops automatically roll to break-even +1. And now, I can take the freedom to look elsewhere. And that's true. Those features are also here on the Trade Manager. But the Trade Manager has this risk component built into it. And you can see you can choose multiple targets too, and how you want to split up the targets. Currently, I'm all in, all out. So 100% at target 1. But I can set as many as 3 targets and still have a runner in play. So very sophisticated piece of software. All right, there's a bunch of questions here. Hold on, I'm just scrolling back a bit. Mark, you've been very patient. Mark was asking about the targets on the trend chart. Let me go over the targets for all the tools. These are your high probability targets. For the scalping tool, we are looking at $50 per contract. For the swing trading tool, we are looking at $100 per contract. And for the trend trading tool, we are looking at $200 per contract. So that will change based on the tick size of the instrument you are trading. Now, I mentioned earlier to those of you who are trading small accounts, a good way to get more bang for your buck as a small trader is to trade some of these $5 instruments like the NASDAQ and the mini Dow. And in case you think you can't make any money on those, think again, because a $50 move, now we're not talking ticks, we're talking dollar for dollar, a $50 move on the NASDAQ will probably be matched by a $50 move on the E-mini. However, the E-mini trades at $12.50 a tick. So depending how the trade sets up, whereas you may only be able to afford one contract on the E-mini, you could afford at least two and maybe even three on a market like the NASDAQ or the mini Dow. Now, two or three contracts obviously gives you more trade management opportunities. There's nothing worse than trying to manage a single contract. Do you take profit? Do you run a stop? What do you do? It's really difficult. But if you're trading multiple contracts, it makes it a little bit easier to manage your trade. So if you do happen to hit a runner and the market takes off like this, here's our first micro-macro cross, and let's say I'm going to take 50% on target. Oh yeah, here's something else you can do. You can always dial down your risk amount. If you're looking at this and you're saying, gee, I don't know, a lot of yellow bars through here, a lot of choppiness. Yes, I know it's a first micro-macro cross. I should take it. I know, I'll dial down my risk amount. So we take, we'll use the preset targets. So we would set it up like this, and I can go in for two contracts. Trade Manager will lock in my $50 target right here. So I've got profit on one, and now Trade Manager will manage the other contract until we get stopped out, well, pretty much the same place. But the point is, you can have a runner in play that if the market did take off, you still have that extra contract in play. Whereas if you were trading a market like the E-mini and you only took the one, well, then you need to make a decision. Do I take the profit when I have it? Do I try to let it go further? Or what do I do? It's a big question. But a lot of people think you can't make money on $50 targets, just thinking of the scalper for a moment. But those people are what I like to refer to as wrong. The $50 target is actually a very high probability target for scalpers. And scalpers know, professional scalpers know, that it's all in the quantity. So I'm going to run some numbers by you here really quick. I have these numbers for the E-mini. Did you know that if you traded the E-mini S&P, well, actually, I guess this would be true for the NASDAQ as well, because we're looking for $50 targets. If you traded the NASDAQ just twice a day, and you can substitute any market, crude oil, NASDAQ, gold, E-mini, 2 signals a day, folks, for $50 a signal. 2 signals, that's it. You're not chasing your tail, not chasing every single signal. 2 signals a day, and you traded 25 contracts per signal, you would make $500,000 a year. Pretty impressive, right? Now, I know you're saying, well, Eric, I can't afford 25 contracts. Okay, what if you traded 3 contracts? What if you averaged 3 contracts? That's still $60,000 a year on 2 $50 signals per day. Think about that for a minute. Compare that to how you may be currently trading, where you're trying to get in and out of the market, a dozen times a day. I had one fellow come to me. He wanted to be a scalper. This was, in his mind, he had this set up. He wanted to be a scalper. He wanted me to show him a way to take 100 signals a day. I said, you're never going to make it as a trader trading 100 signals a day. Needless to say, he never came back. but you will not make money trading 100 signals a day. I had another fellow come to me. He wanted to trade 6 times a day. And I said, well, first off, you can't make the market give you signals, right? This isn't like a job where you go to work and the harder you work, the more money you make. In fact, in trading, it may be the exact opposite. The more you trade, the less money you may make. There are days where that's the exception to the rule. Like the early part of the last week, the NASDAQ was just shoveling out the money. We couldn't take the trades fast enough. But for the most part, people think they need to trade more to make more money, but that's not the case at all. What you need is you need to be correctly capitalized. So let's say you can only take 2 contracts. 2 contracts twice a day, $50 targets. You have made $40,000 a year. How would an extra $40,000 a year impact your lifestyle? A pretty positive way, I would imagine. And that's only finding 2 $50 trades. Look here on our Hawk. Okay, here's one. There's our first micro macro cross. Boom, there's one target. Well, actually, we hit our profit objective right there on the one already. Here's a macro pullback. Boom, did it again. So we've actually done better. We've taken, instead of just $50, we've actually hit $100 targets on 2 high probability signals in the span of about 25 minutes. Done. Okay, see if I can get a tea time now. You just need to do that twice a day. What if you did it 1 contract twice a day for $50? You have made $20,000 a year. Okay, might not be enough to live on, but certainly would impact your lifestyle in a positive way. Buy you a very nice vacation, buy you some nice little toy, or certainly add to your retirement account, probably doing a little better than what your current retirement account manager is doing. But the point is, the money is made in finding high probability signals and correctly managing them, not overexposing yourself, so that when you do take a losing trade, you don't wipe yourself out. All right, so I kind of beat that one. Mark's asking how many monitors needed to watch 4 markets. Well, I'm actually just running, technically I'm running 3 monitors. One has the room management software on it, so I'm trading really off of 2 monitors. And that's because I've sized my charts this way. And then when I get an opportunity, like I hear scalp, okay, so I go here and I expand the chart, and then I can see what's going on, if this is an opportunity I want to take or not. Ray Burke likes to have a monitor for each chart. So all his charts on his monitors are this big, and he runs 6. He has a professional setup with 6 monitors. But you can see even on the one, I'm looking at one market here. So I would say 2 monitors would give you 2 markets to watch, and that's plenty when you're starting. Okay. Yeah, okay, Bob says, you seem to go, would you go over your stops? You seem to use large stops. Yes, Bob, I do. And just a quick refresher, that's because we're looking for high probability signals, right? And I need to give the trade enough room to at least find its high probability profit target. So here we have a macro pullback signal. Actually, let's go back to the first, Okay, here's the first micro macro cross signal. I don't know where this one's going to go. So if I'm going to enter it here, I know that, well, here's a little lesson on charting. And this is something that's pretty easy to see with your mean Renko bars. Is before the market reverses, we need to see a test of the extreme. So here's our extreme price. Prices come up, they head lower. Before they can reverse, they need to test the extreme and fail and head lower. If this were a downtrending market, it would do the opposite. It would test the extreme and fail and head higher. Now, some of you are immediately going to recognize these as M or W formations. Some people call them 1, 2, 3 tops, 1, 2, 3 bottoms. If I threw another little segment in here, you would call it a head and shoulders formation. The principle is exactly the same. So here I am generating a first micro-macro cross signal to the downside. I know it's a high probability signal. However, I haven't really had my test of the extreme yet, have I? The market's kind of come straight down here, and I'm thinking, I might see a test of the extreme, so I don't want to strangle this trade. I don't want to set it up like that. What can I do to protect myself? Well, there's a couple things I can do. First off, I could roll down my risk amount, which I've already done. Secondly, I could postpone my entry. If it's not too far away, I could enter below the lows. But remember, I only have a 10-tick profit target, so 1, 2, 3, 4 ticks to get entry. I'm almost halfway to my profit objective before I even get into the trade. So I could do that. The other thing I could do is I could take it on the hash mark and I could risk it a little bit deeper. A lot of times my eye is drawn to the macro trend line because that's where the macro pullback would go, right? If there's an obvious swing point, you can see we have some obvious swing highs through here. That might be a pretty good place to cover. So I'll use things like that to try to gauge my trade. So let's see how this worked out now. Okay, brings me in, a little bit of heat. Okay, got an opportunity to roll my stops, macro pullback. Okay, finally hit our profit objective, but that was only due to being able to run a deeper stop. Right now, I probably would have held my stops. You guys see me do this in the room a bit. A lot of times I'll hold my stop until I see the sellers make a real effort to send the market lower. So in other words, what we have is we got brought in here and we had our stop up here. So sellers come down, they leave us hanging for a tick or two. Now I know this is a high probability target. I know this is a high probability trade. Okay, here come the buyers. Here comes my test of the extreme. Now here come the sellers again, right? This is really the seller's last chance to regain the market, right? If the sellers fail at this point, the buyers will take it back, right? Because the buyers have already shown us they're right here. The buyers are at 42.01, just like they were over here. So this is the seller's last chance to regain this market. If the sellers fail here, then the buyers are going to take the market away. So now that I've seen the market actually head lower, well, I'm going to start rolling my stop now. So I'm going to bring my stop down above here. And then as it goes lower, see these bars here with these long wicks to them? That tells me there was some buying effort going on, but the sellers overwhelmed them. And so then as the trade heads lower, I can let the trade manager take over once it flips over to my side and manage my trade to its completion. All right, so a little bit of a lesson there for you on reading price momentum. Okay, I see there's a couple more questions here. Let me get to those. Michelle is asking, what kind of trend lines are there? Are they EMAs, SMAs, AMAs? truth be told, Michelle, I don't know. I'm not sure anybody was privy to all the components of the trading tools. I had my hand in designing these, but honestly, I don't know what the averages are on the Hawk or the Falcon for that matter. Okay, Heinz is asking, can you show the other cheat sheets from the Eagle, Falcon, Raptor, etc.? I could if I had them finished, but I'm sorry, I don't have them finished yet. They are at the top of my to-do list, but honestly, I have been so swamped of late, I haven't even had a chance to do those. Well, I shouldn't say of late. I know you guys have been waiting for those for a while, but I promise, okay, right here and now, before the end of February, those will be done. So if you don't hear from me, shoot me an email and I'll send them to you. All right, there, I've laid it out there. Mitt is asking a question. Milt asks, would you ever enter a trade in anticipation of it meeting a high probability signal? Yes, all the time. All the time. So for instance, if I understand your question correctly, here is a late filter entry signal on the Falcon, right? Filter went out of sync, filter went back into sync. Well, actually, technically speaking, this isn't. The trend line went out of sync for a couple of bars, but that's a little bit of a refinement I won't get into today. If it goes out of sync for a bar or two, sometimes I'll just ignore it, because what happened is, see this bar right here? It went one tick too low, just low enough to twist that trend line out of color. But you could also call it an early trend change signal. And when I get those high probability signals, yes, absolutely, I go for them all the time. So you can see very nice result out of that. And if I misunderstood your question, Milt, please enter it again. Bob's asking, would you go over the market replay feature? Well, the market replay is here on your account settings. So when you go to connect, you can connect to the market replay. And in market replay, you can enter which market you want to replay. But before you do that, I believe you need to download the data for the market that you are interested in. Yeah, that's the one thing about Ninja is it's not always the most user-friendly. Okay, here we go. Download replay data. That's what you need to do first. So you go here, you download the data for the market you're interested in, whether it's the E-mini or gold or crude or whatever. And then you can connect to your market replay and enter the date that you want to replay, and you can replay the day. See how you would have traded it. Bob says, yes, I've wondered about this when I see market profile site using a 3-tick stop. Yeah, I think Bob's referring to my earlier comment about those spam emails that you get with the high probability targets and such. Listen, folks, they show you those because they know you're like a bull with a red flag. You're going to be chasing anything that offers a high probability signal. You know what gets Wall Street all excited? Wall Street goes over the moon for a signal that performs 55% of the time. 55%. You think Wall Street is chasing a signal that's right 87.7% of the time? Nope, not at all. And that's because Wall Street knows that in order to make money, you need to have Money management. Here's just a real quick tutor on money management, and you can do this on your own. It's at Indicator Warehouse, Money Expert. And what I'll do is I'll put this in the window for everybody. And you can play with this. This shows you the importance of money management. Just really quickly, Trader Joe, he's going to be a smart guy. He's only going to risk 1 or 2 contracts each trade. He starts with $10,000, runs it up to $14,000. Fantastic. But what if he had used money management? Well, if he had used money management, okay, well, this is a little bit of an exaggeration. It works mathematically, but if he had used that same, apparently if he had used that same 10,000 instead of 14,000, mathematically, he could have run it up to 90,000. But here's the important part. $10,000 account. You're only right half of the time. Only 50% winners, 50% losers. Where does the 87.7% winning signal come into play here? Right? It doesn't matter. I'm going to show you how you can make money almost by flipping a coin. Heads we buy, tails we sell. But here's the key. We're only risking 2% of our account. Okay, this is more realistic. Okay, so the blue line is Joe trading his single. The green line is us trading multiples. And you can see that we're pretty much lockstep with Joe early on. But we win when he wins. We lose when he loses. The difference is that when we win, all of a sudden we're starting to win more. And we lost a little bit more here. We actually lost at one point a little bit more than Joe. He was doing a little better than us. But look, at the end of the 100 trades, Joe is up to just under 13,000. We're up to 14,000. Now that doesn't seem like a lot, not a lot of difference, but look at this equity curve. Look at the heat that we were taking here. You know, right out of the gate, we took a series of losers, finally had some winners, took some more losers, finally had some winners. This is like real life trading, folks. Okay, let's do it again. Okay, here's another one. Very choppy equity curve. But look, Joe wins, we won a little better. Joe loses, okay, we lost a little more. Joe wins, we won better. Joe loses, okay, we lost more. And in fact, again, at one point we were doing worse than Joe. But at the end of the day, Joe takes his 10 grand and runs it up to 11.5. We take the same 10,000 and we run it up to just a little over 13,000. Instance for instance, you will make more money being correctly position sized. Like it says, this is not unusual. This is the norm. And this is the part where most people drop the ball. If you click on this chart, you can actually see how the trades played out, trade for trade. And when I talked to the programmer about this, I said, you can't have any home run trades. You can't have any $1,000 trades because that doesn't happen in real life. So you're going to notice the biggest trades through here are like $350. That's real life. Oh, I think here was a $500 trade. That would be a home run trade for most people, $500. But look, because we were correctly position sized, we earned 1,000, not just 500. So take some time with this. It's a very helpful tool. Okay, back to your questions. We're running out of time here. Walter is asking, is there any way I can get access to your trading room where you are doing actual trades? I would like to see you trade in real time with your systems. Unfortunately, right now, the trading room is reserved for DTS owners. That's the point of this Wednesday morning room, is that I can show you how these tools work so that you can see that, yeah, okay, here's the Raptor. Band changes color, we generate a buy signal. Okay, we didn't engage there, but we come right back with another buy signal and a nice progression higher. I do the same thing in the trading room. The DTS trading room is partly a trade call room, partly a trade education room. I go over the features of the tools with people. I show them price structures that they can learn to look for. I teach them trade management, and hopefully we pick up a few good trades in the process also. Walt is asking, how much do you get as a mentor? I like your teaching style. Well, thank you, Walter. I do coaching. My calendar is limited, but you can find out about coaching at, I'll give you my website. It's supportandresistance.com, and there will be a link there for coaching. And if you have any questions, you can always email me also at eric@supportandresistance.com, and I'll send you that also. Okay. Oh, fantastic. Michael is sharing something here. Let me see if I can, if it will let me copy it. Nope, it's not letting me do that. Okay. Michael says that if you go to the NinjaTrader community, there is a site. Oh, I can type this in for you. It is www.marketreplaydata.com. That allows you to do the task much faster. Thank you for sharing that, Mike. Bob's asking about the profit run for the room. Oops, hold on a second here. Let me see if I can find the other profit run. I'm not doing a profit run right now. But I can show you the previous profit runs, or I'll give you the link for the profit runs, if I can find it. Okay, here's, if you guys are interested, here's the information on the profit runs, and I'll send you that link. Bob, I'm not recording the current room results. Bob's asking about the current room results because it's not strictly a trade call room, right? I don't have those results because I'm doing stuff like you see me do here, where I'll take the time to explain to folks, okay, we're getting a first micro macro cross signal. This is how I would deal with it. And while I'm dealing with explaining this first micro macro cross signal, we may have a signal fire in crude oil or soybeans or the E-mini or something. So the room is partly educational and it's partly trading also. It's to teach you how to use your tools, right? So that you don't rely on me for everything. It's like one member said, and I'm sure she meant it in a good way, but she said, heaven forbid that you get hit by a bus or something. So, yeah, it's not just a trade call room. And for that reason, I don't have the results for the room. I can tell you yesterday was a very difficult day. I think I clawed back to a small number in the black. The day before was a very good day, as was the day before that. the markets were very cooperative, but yesterday not so much. Today looks like about the same. All right, you guys, if you have any other questions, please enter them. Otherwise, I'm going to thank you for your attendance. Oh, good question here from Joe. Joseph asks, what is better, the Raptor or the 3 DTS birds? Well, better is a very subjective term. Some people are better suited to the Raptor. Some people like only following one chart. Some people are okay with not getting an early signal. Other people like to have a little bit more control. A lot of people like to have the option of saying, yeah, okay, I can take advantage of the market when it's only in a scalping environment. I can take advantage of the market when it's trending and when it's swing trading. A lot of people like that flexibility. But the tools are complementary. So you can certainly start with one and add others. They don't conflict each other. You know, I trade all 4 at the same time. So that's certainly feasible. But Adam would be a good fellow to ask. Let me give you Adam's email address again. So he would be a good fellow to talk to about that. Ken is asking about the link to the DTS room. Ken, please send me an email and I will get you the link to the room. And that, once again, was eric@supportandresistance.com. You can sign up to it from the members area also, Ken. Oh, fantastic. Dustin says he was having a little problem with the trade manager. I sent him a patch and it seems to be working. Terrific. Okay, you guys. Well, thank you very much for your attendance today. I hope I've answered some of your questions about DTS, the trading system. If you have any questions, please do not hesitate to contact me. And let me give you that link again where you can find out more information on your own at the Indicator Warehouse site. There you go. You can find out all about the packages, the pricing, payment plans, and so on available right there. Okay, you guys, for you DTS members, I'll see you in the trading room tomorrow